Hey traders, this is Ron Haidt at Market Tamer. Happy Thursday. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Dow. The market's had a good day. They took back a good chunk of yesterday's losses. The Dow ETF Diamonds was up 1.68%. Volume decent. It essentially closed right on or just a couple pennies above the 200-day moving average in purple. The trend here is still down. We did not close above the 5-day. We take a look at the SPY, which I have a bullish position in. You can see how it broke the channel here in early October. We then went into a pen-in, and then all heck broke loose yesterday. Today we gapped up, again finishing off the highs of the day and below the 5-day EMA. Again, bearish going into tomorrow. But look at the Qs, and we're going to talk about this more in a little bit. There's a lot of action after market, but the Qs finished up over 3%, 3.46%. They closed in the upper probably quarter of yesterday's candle. That was impressive. Good volume, but they closed right on their 5-day EMA. That's bearish, still heading into tomorrow, even looking out just a few days. We look at the IWM, rose just 2.17% and still inside the previous day's candle, and it didn't even touch the 5-day. This also remains bearish. If I take a look at the VIX, $ VIX, it only lost 4 percentage points today, just 4 points. That's it, 4.0%. Still is bullish. When you add all this up, the selling isn't necessarily over yet. You know, tomorrow is Friday, and you know, we could have a wishy-washy day, but we weren't really that oversold yesterday, and that's what I commented about in last night's video. Today definitely put us back in normal or not oversold territory, just regular territory. So we could easily just roll right back over tomorrow. So again, bias is still down for major indexes. Now let's talk about stocks that are going a little bonkers after hours. I'm going to pop open this panel here. And the first one we're going to look at is Amazon. If I can type in the correct symbol, there we go. So you can see it was up 117 bucks, right? That was today. After market, it's all the way below 1700. So you're up 117, and then at one point we were actually down 110. That's just crazy. So this thing is flying all over the place right now. If I zoom in on Amazon, 1700 was here. We were all the way down here in aftermarket, and that was probably just 15 minutes ago. So who knows where this stock is going to be come tomorrow. Right now it's still clinging to that 200-day moving average. I mean, at one point today, Amazon actually closed higher than where it even opened yesterday. So not only did it take back the losses, over a 2-day period, it made gains. That's how strong this was. So now the traders after market are just trying to figure out, well, what are we going to do here? So now we're back down at this 1700 level. We'll comment more on Amazon in Sunday's video for sure, because we'll have to see how tomorrow plays out. So here's Google. Tacked on 46 bucks during the day. Finished the day right there. But after market, we're down at 1068. That's about $33, $35 lower. 1065 puts us right where my cursor is. So not at yesterday's lows, but we're back down there. This is going to put pressure on the NASDAQ walking in tomorrow. Here's another stock that had earnings. This is Southwest, LUV. This thing got clobbered 8% today. Massive volume. It's basically clinging to those lows in May. May, June, and July. I'd have to go back 2 years on Southwest, and you can see there's also another bottom in September, and there's some more back from, that was actually September 17, then back in February 17. If that falls, which are basically today's lows, we get below today's lows on a closing basis, you start talking about low 40s. That could be as much as 20% lower, so keep an eye on LUV. Now, a stock that is doing strong, and something I'm watching, is Delta. This one has a strong seasonality that's about to kick in. And Delta, after having earnings, it popped up. It finally caved in on Wednesday when the market sold off. But look what it did today. That's bullish engulfing on a pickup in volume. Now, granted, it still couldn't get above the 200-day moving average in purple, which is the institutional line. But that's a pretty impressive candle. If it can close back with that 200-day, that would be a strong sign. Microsoft. This company had earnings, but this one is very concerning if I was a bull. Zoom in a little further. So the company reported earnings last night, right? The stock gaps up and couldn't even close above the open yesterday. Yesterday's open was 108.41. Today's close was 108.30. Other stocks that you just saw didn't need earnings to get back up to recoup the previous day. Microsoft actually did. So this is not necessarily a sign of strength. I'd put a big yellow flag on this and I'd be very careful. If I was trading Microsoft, which I'm not, but if I was, and I had a protective put in place for earnings, I'd still want to keep that sucker because I'm not entirely sure the market's done going down as it stands right now, based on my previous commentary. And Microsoft would definitely be thrown into that boat. I mean, Delta looks way stronger than something like Microsoft right now. Here is Grubhub. If I zoom in, this stock lost almost 12%, $11.99. In doing so, we closed below some of those recent lows. But this is a great example of using some protective puts. But check this out. There is some support right around 90, which is where its low intraday was. But the next gap fills down at 70. So be wary on Grubhub. And Walmart is a stock that's looking very strong. I commented about Walmart over here. You probably remember it in the videos. It moved too much in the earnings report. But then it just, slowly came lower, didn't do a whole lot for about 2 months. And even though the market's been getting, kicked in the you-know-what, this one just pushed higher, and today it even closed above the earnings close. The real target's up around 107. Sure, there's this little spike high here, and we can make an argument for a gap fill, but that high is the actual target. And if I wanted to trade Walmart bullish, this is something where I might consider the 20-day EMA, maybe as a trailing support if it wants to run. So there's at least one stock that is or has been holding up well. I wish you guys a fantastic Friday and a great weekend ahead. We will have a weekend video, and then we'll see how Google and Amazon are doing. Remember, bears still have the edge on these daily charts as we approach the elections. That's the next big thing on the agenda. And I think there's some skittishness in the markets just due to that. All right, take good care, folks. See you next time.